Hi, and welcome to our weekly report for the week starting Monday, the 29th of July. We have a busy week ahead of us, which starts with slow economic calendar on Monday. Japanese unemployment figures, a rate decision, and policy statements are due on Tuesday. Going forward, Eurozone GDP, employment figures, and CPI data, in addition to Fed interest rate decision and press conference, will be closely watched on Wednesday. On Thursday, the main point of interest is Bank of England rate decision, minutes, and Governor Carney's speech. Also look out for US ISM manufacturing data for July. The week will finish on Friday with Bank of Japan monetary policy meeting minutes, Australia retail sales, UK construction PMI data, and Eurozone retail sales figures. Now let's take a look at few markets. This is the intraday 4-hourly price chart for euro-dollar currency pair. We can see that euro-dollar is capped by this falling resistance trend line. Mario Draghi was speaking last week and he's managed to talk the euro down. The key trading level for us is yet again at the psychologically important round number 1 spot 12, the cluster of these previous lows down here. Any rallies from the current oversold levels into that level 1 spot 12 would be met either by retest of these previous lows, i.e. there for the round number, but also the falling trend line and also a 200 period moving average as well. So rally from the current oversold levels and the rejection that level would appear to be bearish, targeting 111 to the downside, 110.65. Confirmed loss of 110.65 could open the way for the retest of 110. Possibly even 109.70 to the downside. Alternatively, a rally and the end of day close, therefore the breakout above 1 spot 12.30 and the retest of that level from above as a newly found support would change this bearish outlook, which could be triggered by Fed rate decision, maybe if they surprise the market with a larger cut than anticipated, that could be reacted as a weakness in US dollar. So keep an eye on that Fed rate decision on Wednesday, and that would cause the price to spike higher significantly towards 112.67, 113, 13.20, possibly even 114 to the upside. Cable, we have a brand new prime minister in number 10, but the same old story for sterling dollar. Unfortunately, sterling dollar is under pressure. Current price action is downtrending, capped by psychologically important 1 spot 25 level, falling resistance trend line, and also the pivot level, and also the cluster of previous lows. Nothing new there. Any oversold bounce backs into that level would likely be met with some selling pressure, opening the way for a deeper retracement to the downside towards 124, 123.50, 122.95, possibly even 121 over a longer period of time. Alternatively, if we see a rally and the breakout above 125, yet again, something that Bank of England might do, or Mark Carney might say, or maybe the Fed's action on Wednesday might trigger volatility in cable as well. Breakout above 125 could change that outlook, retest from above as a newly found support, and spike higher towards 125.95, 126.80, possibly even 128.80 on the upside. Dollar Japanese yen appears to be moving higher, which is a kind of counterintuitive US dollar strength into Fed's rate cutting meeting and the press conference that will follow as well, which could possibly indicate further dovishness by that central bank. But the key trading level is at 108.40. Pullbacks into 108.40 and rally from there would be perceived to be bullish, potentially targeting 109, 109.50, above 109.50, 110, 110.20 come in play. Alternatively, bearish reaction to something that Fed might say and do, and a dip lower and close, the daily close below 107.80 would negate this current bullish outlook, potentially opening the way for a deeper retracement towards 107.20, 106.40. Gold is consolidating sideways in 4-hourly time frame. We saw a breakout above this previous falling resistance trend line, and the price is now just consolidating and waiting for the FOMC again. Now, the current key trading level to the downside is at 1410. That's a big support level. A rally and a breakout higher above 1426. The end of day close above 1426, and the retest of that level from above would be perceived to be fairly bullish. Then this would be seen as a consolidation price action which broke out to the upside, targeting 1446, 1452, 1455, 1465, possibly even 1472 on the upside. Alternatively, a dip lower and loss of 1410 would negate that, targeting 1400. Confirmed loss of 1400 would open the way for a deeper retracement towards 1380, 1373. Crude oil appears to be quite bearish. We have a sequence of slightly lower highs. We have a rally into $60 per barrel, which is psychologically important, a 61.8 fib retracement of this impulsive move lower. Now, subsequently, the price moved lower. Despite increase in geopolitical tensions between Iran and US, we had inventories data last week which shown a massive drawdown of 10 million barrels versus expected 4 million barrel. But the crude oil is really not reacting much in either way. It's not selling off, it's not rallying on any of the news which would normally trigger a bullish reaction. So the key trading level on the upside is at 57.40. The current price action is capped by that level. The current price appears to be forming a bear flag. They have the tendency to break to the downside if they found in a clearly defined downtrending market, which this could possibly be classified as one. So confirmed loss of these current lows at 55 would be perceived to be quite bearish, potentially targeting 53.75, 52.50 to the downside, 51.25. A loss of that opens the way for the retest of 50. Alternatively, a breakout higher and a spike and a daily close above 57.36 would negate the bearishness, potentially targeting 60, above 60, 62.50 and 63.50 come in play. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.